Hello traders, it's Samurai Trader here. Welcome to my recap video, and in this video we're going to be exploring a number of the trade setups from the Day Traders Fast Track program and how we target $400 a day per contract. Now, if you're new to my videos, if I could ask you to please read the disclaimer in full, that would be great, required by the CFTC. So in this video we're going to be exploring trading Forex, the difference between range candles versus tick candles, and I'm also going to do a quick review of some of today's trading that we had on the NQ133 tick. Now, I had a student I was training live today, and he said to me, I make it look so easy. Well traders, I've been doing this now for over 23 years, and three skills that I've finally learned after many years of trying to day trade profitably was discipline, patience, and focus. If the setup just doesn't look right, don't take it. Just sit back and wait. Now, I know I've already got a lot of experienced traders watching this. Please watch this video to the end, because you know, one of the challenges when it comes down to discipline, patience, and focus, many of us, we don't want to hear this message. We don't want to hear the psychological side of trading. But traders, as I preach continually, that trading is 5% money management, 5% the trading strategy, and a massive 90% head stuff, psychology. So what's really important is that you must master discipline, patience, and focus, and you do that through at least 2 hours a day as sim trading. That is, if you are a brand new trader, and even if you're an experienced trader, if trading's not making money for you up to now, if you've been finding trading difficult up till now, you need to go back to the simulator and you need to practice developing discipline, focus, and patience. And all of those like muscles, the more often we use them, the better we become at them. And if you look at my edge, and we all need an edge in trading, the edge that I give you is brilliant trading strategies. Now, what it comes down to, that in applying those strategies, you still need to apply the discipline, patience, and focus. Now, for the newer traders that looking at the charts for the first time, and you may look at them and say, wow, these look difficult. Well, I love this statement. If we did all the things we are capable of, we would astound ourselves. And it's true. Anyone can learn how to trade profitably, providing you apply discipline, patience, and focus. That is the difficult part, traders, in mastering that. Now, if you haven't, just before we move to the charts, by the way, if you haven't already done so, please subscribe to my YouTube channel. And if you go to my website, on the bottom you can see my website address there. You can obtain my free ebook, The Truth About Day Trading, and of course a lot more details on my fast track program. Now it's now over 12. I've actually got 13 trading strategies for day trading and swing trading, so you can obtain all of those for $197. And natural fact, there's over 20 hours of recordings now in the course. So let's now have a look at the first thing I want to talk to you about is trading Forex, the difference between range bars and tick bars. And tick, in some ways, which we can see on the right there, reminds me, it's very similar to time-based charts as far as the volatility. Now personally, I prefer a smooth looking chart, so let me just show you this as an example. If we look at, this is a range bar, that is, this is a 5 range, or 5 pips per candle. Look how smooth that is. Now we can see we've got an incredible area of consolidation here, and we'll talk about that in a moment, but look how smooth it is. Now this is from midnight. Now it's now 12:48 in the afternoon here in Australia, and so we've got over 12 hours, and we can see here that it's been pretty much going sideways for most of that time. Now let's now go back and have a look at the tick. Now this is since 5 a.m. this morning up till now, and notice the difference in the way these candles are formed. Now one thing it will give you, it shows in some ways a lot of these little, which we trade, we love these pullbacks. So you've got a bounce here, you've got a bounce here, you've got another trade here, so you've got a 34B, another 34B. Down here you've got a nice little pullback. That's a T2. You've got another T2 just here. That is actually a T2 as well. So you've got tons of trades. Now personally I prefer a smooth chart, which is what I tend to find that a range chart on trading Forex will give you. Now what about our trade setups? You can see here we didn't have anywhere near as many setups on the range chart as we did on the tick chart. Now that was an 89 tick, so it's a much lower time frame. So a lot of people like to trade much higher time frames. So it just depends on your trading style. Now here of course each one of these candles, if you were trading a standard lot, is worth $50 US. So your stop would be under here, under here, under here, and for many of these moves they've returned a good 1-to-1 or better. Here you've got a nice T10, and so you can see here, even though you've gone into chop, there's still plenty of trading opportunities. And what we're seeking of course is following the 34, which is a magnet on virtually all time frames and all markets. When you're above the 34 you stay long, and when we're under we want to short the market. There are other things that we look for as well, but that's the main consideration. So if you want to day trade, if you want more trading action, you may even drop the time frame even lower. So remember, this is a 5 range. You might drop it down to a 2 or 3 range if you want more action. However, what you have to be aware of, and let me just try to find a news announcement. Where are we here? We can see there's some sort of announcement here. Look at that move. See, it moves very quickly, and that is one thing compared to a time-based chart. A time-based chart, at least you can tell when you've got the bar count on your screen when the candle is going to close. It's more obvious. Now on a tick you can tell when it's going to close. However, in a fast-moving market, as we saw here around this was obviously a red flag announcement. I'm not sure what announcement it was at this stage. You can see the market really moves quickly. So traders, I prefer range over time and tick. Here you might want to drop it down if you're after a little more action. And also remember, when you're trading a lower time frame or a lower range, your stops are smaller. So if we took this as an example here, our stop loss there would be nearly $100 on a standard lot, which means if you're a 2% risk, you'd need a $10,000 account. Now one great thing about trading Forex is you have of course standard lots at $10. You've got a mini at $1 a tick or a point, pip I should say, and you've got micro, which is 10 cents per pip. So you can drop down. So if you don't have a $10,000 account, you can trade for, if you had $5,000, you might trade 5 mini lots or 4 mini lots. If you've only got $1,000, you might trade 2 or 3 micro lots. So you've got incredible flexibility. Our setups work incredibly well on Forex, and once again we're using our 8. The brown line there, by the way, is our trigger line. We've got there our 89 and our 200. Now let's quickly go across and have a look at the 133 futures market. That is the NQ 133. Now we can see here that this is from the market open, and this is actually from about 9 o'clock onwards. You can see that trading against a trend, particularly when the market opens, is like trying to catch a falling knife. You want to wait until the right time. If you are a counter trend trader, and for the newer traders or for the traders that haven't been making money, if you go back and look at why you haven't been making money up till now, how much of your trading has been counter trend trading. Now sometimes some people may think I'm a little aggressive with them, or even grumpy or really firm on what I say when it comes to counter trend trading. By the way, I do counter trend trade, but I've been doing it a long time. is that I dish out what I call tough love. If you're one of my students, and if they could only speak now what I'm like when we're doing live trading, or we're doing it doesn't matter where they are in the world, we'll do it over Skype and go to meeting, is that I'm really tough on new traders, because what's absolutely critical, traders, is that we develop the right habits from day one. Remember, habits will either make or break you. It's the little things in trading that make or break you. So look at these trend trades. You would have been finished now trading within this trend. However, I do want to say this is 30 minutes of trading, and that is moving really quickly. So you're using market orders, very fast trading. And remember, what are we following, traders? We're following the yellow line. Okay, that's our trend. Now we've got down here, we've got an 89 bounce, and we've got some 200 bounces. The market's starting to slow down, so it's starting to become quite tradable. 89 bounce, 200. We're firing off left, right, and center. But these are the areas where you need to develop your skill set around these, because this is also where the patience and focus and discipline come in. And what I've done, I've removed the channel and a few things off the charts just to make it easier. Like you had a beautiful, that was a great T89 just there. And so look at these bounces off the pivots, and away we go. So traders, I'm going to wrap this video up, but when you follow the trend, this is where the fortunes are made. T2, 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 another T2, another T2. Thank you very much. You know, this is how you earn your $400 a day. Now, just before I finish up, the lesson I covered yesterday was the T23. Now we can see here we've come down and we go across. There is a T23 right there. Here is your T20, the cross of the 8 and the 34, or if you're using the trigger line, you could have been in on this candle rather than that candle. But look at these trends. Now when you get in a new trend to begin with, this is where on the NQ, for an example, you can go and easily capture your 21 ticks, which is $105. 4 of those a day, you're on $400 a day per contract. This is where wealth is made. Now for the students that follow me, you know I'm a scalper, and I scalp 14 ticks, 12 to 14 ticks each trade, because I'm what they call a scalper. However, I recommend, and I train students in, when you first get in on these ones, go for 21 ticks. Remember, your first trade, your first 1 or 2 trades in a trend, such as here, this is where the fortunes are made. Such as here, when you've got your new setups, such as here. Now what about this thing? You may say, well, what about this? Well, you had a beautiful 200 bounce, 200 bounce, 200 bounce, and on your crossover you're in here. Where would have your stop been? Under your closest swing low. But if we measure that up here, what have we got there? 6. Okay, you've only got about 14 ticks, but then you had another one up here which easily gave you your 21 ticks. So traders, that's a quick wrap up. Any questions, please keep those emails coming in. Remember what Da Vinci said: fix your eye upon a star and you can weather any storm. In other words, have a goal in mind. Use a simulator. Even though you might have to continually go back and restart your 100 trades, my job as your success coach is to work with you in helping you become a master world-class trader, and we do that through discipline, focus, and patience. Thank you, traders.